Happy Hump Day, Everyday Growth Advisors, back again on a Wednesday. How are you guys doing? Good morning. Welcome back to the stream. Gonna make it as efficient as possible. Lots of stuff happening in the markets. Oil still continuing its rally up. For those of you that are not part of the Discord, I put out a weekly report, which is called the Playbook, which is what we're looking for the week. I'll show you what was on there this week. Mainly a summary and forecast of the previous week, and then this week banks and energy leading the way. Last week, which means we should see a slight pullback, and we indeed did get that at the start of this week. And that was a great opportunistic time to pick up more, as I was mentioning, as a accumulation for another rally down the road. Buying on the weakness makes sense. However, financials are reaching frothy levels, so exercise caution. And then energy continues to outperform the market, setting up for potential rotation into this week as oil prices stabilize, plus OPEC Plus continues to hold oil prices at the current levels and control production. Right, as mentioned before, I've been talking about oil for a while as well, how OPEC's not really going to agree on, cutting oil production just because demand's starting to increase. So, the focus of this week was airlines, cruise lines, crypto plays such as Mara, Riot, Consumer Defenses, Walmart, PepsiCo, Coconut. Definitely Coconut. What's up? Good morning, guys. It's morning. You know it's morning because I say coconut instead of Coca-Cola. Energy, XOM, BP, and Chevron all up nice double digits this week. If you look at them, looking beautiful. Yeah, it's been an interesting week so far. And we see continued strength in market environment. We had a little bit of a rug pull for about 2% yesterday, which was nominal. Are we going to get more? There's a possibility. I like to think so. I think today we might see more selling. It's a possibility. But if we stop shy of a couple of key levels, then we'll continue higher. I'll get to that in a second. And then let's have a look at the news real quick. Jeff Bezos, tech leads rally, oil advances, Biden, Okay. Not really that much interesting stuff on Bloomberg. Let's have a look at the Wall Street Journal. Stock futures rise, pointing S&P 500 rebounding. Possibility, but then if the news is so bullish, I feel like going bearish. Galaxy Digital buy, Bitgo, In other news, Dogecoin is up big time. And halted IPO takes China off the China stock market. Bank tightens credit lines and Archer goes aftermath. Okay, makes sense. Everything screams inflation. Yesterday, Yellen made a little stab at the market, causing a little bit of a scare sell-off to add on to the pressure. We'll see if we can continue to get a dead cat balance today. That will be interesting to see. Personally, I'm going to play it a day as it comes right now because it's impossible to forecast what's about to happen. Damn, awfully quiet chat today. No one even saying good morning. Let me be the first one. Good morning, peeps. What's up? Okay, not much there. And then PreMarket Movers here. Let's see. Everything's looking green except for a handful of things. Healthcare not looking so hot today. I actually wanted to short United Health yesterday but it was running so good, so I didn't. This one was interesting. It ran up pretty nicely yesterday. I may consider taking a short in this in a little bit of time. The issue is stocks like this, Home Depot, and Costco have been running like non-stop. I don't know if you guys realize it, but they have been. These are what we call the core value stocks, right? Look at all three of these: United Health, Costco, and your what did I just say? United Health, Costco, and Home Depot, right? Lockheed Martin, how's that one doing? Kind of had a dip, was a great moment to buy, and it's kind of starting to run up again. Lockheed Martin was one of the, I don't know if you guys remember, but very long ago I valued this business, and its valuation was super undervalued. When we were down here, I bought shares. I think I've been holding them since a long time. Yeah, I bought some at 342. It's at 387 now. Yesterday was a pretty decent trading day. Almost like 1,000 some in profits. Not too bad. Not too shabby. Took a couple of SPY puts. Took a couple of Boeing puts. Took a couple of Baba puts. Those paid nicely. Yesterday, if you took NVIDIA puts, those were also paying nicely. And yeah. Okay, what else do we have here? Energy is leading the pack today with financials, so keep track of that. As mentioned on the playbook, that's going to be the two sectors to watch this week, in addition to travel stocks and reopening stocks in general. So watch those. Consumer defensive and healthcare taking a backseat here. Tech is going to be a little shaky, so I wouldn't recommend going too deep into tech. Pre-market movers on the Dow Jones, Apple, okay, Salesforce CRM, and Chevron all up about 1% or so. ADP non-farm employment change came in a little worse than expected. Okay, that was about 15 minutes ago. No. Yeah. Oh, 12 minutes ago. Okay, that means non-farm payroll is going to be worse than expected too. This week we again have a lot of news coming out, right? And by the way, guys, I just want to keep you guys informed that I think EGA is going to be taking a break from live streams for a little bit because I need to concentrate on other things right now. One of the things is school. The other thing is I want to concentrate on making more quality videos for you guys. I will be doing the pre-market breakdowns, but they will be mainly on the Discord channel from now on. I will be taking a break from doing these live streams in the morning for the foreseeable future until I feel that things are calming down for me in terms of workload. I just feel a little overwhelmed right now, and I think it's a little bit of I need to take a little bit of a break with these live streams so that I can concentrate the time that I have doing these on better quality videos for you guys so that you guys can be more updated. And I promise that I'll put more videos out instead. And believe me, you won't notice that I'm gone. Nah, come on. I mean, you know, I appreciate you guys being, you know, here very often and whatnot. But I think this channel needs to serve a higher purpose and not just these pre-market streams, which take up a lot of time from my schedule to prepare for. You know, I never talk about this, but you know, if I'm being extremely real, these pre-market streams take a lot of effort from my end. You know, preparations for this usually often takes a couple hours, and that hours I can use towards you know, studying for my final quarter. Well, I have the second last quarter in school. Okay, so I have 2 more quarters, this quarter and the next quarter in school, and then I'm done with my master's program, which is something that I really want to concentrate all of my efforts. But then more importantly, I want to concentrate my efforts also on putting out better video quality for you guys, things that you might be not looking at. And if I don't have the time to do that, if I'm so split with all the things that I'm handling right now, you know, I wouldn't be able to concentrate on those things. So I personally think this little bit of a break will be good. I will be doing the Sunday IG story live breakdowns, and I will be putting out webinars every week, so you'll have that. And the webinars are, in my opinion, good enough. The day-by-day updates, you know, Monday, Wednesday, Friday, the ticker breakdowns and all that are going to be going away for a while because I think I need to concentrate on my mental health and my well-being for a little bit. More importantly, I want to concentrate putting in quality time into making really good videos for you guys. Things like trader psychology, things like, you know, why do you feel a certain way when you take a trade? How do you improve that, right? Aren't those things that you would rather me focus on? Things that can really change and impact your life rather than, you know, these pre-market breakdowns that are a little, you know, a little more mundane, right? I personally feel I would serve a much better purpose doing those videos than doing these pre-market breakdowns. But remember, if you're part of the Discord community, you will be automatically hearing my voice every day and hearing my opinions every day. So, you know, people who are part of the Discord community, you wouldn't really see me gone, to be honest. You hear my voice too often anyway. We're on live trading almost entire day. And I honestly think I'm going to be making some radical changes to the way EGA does things. And so I want to make sure that you know, we're always at the forefront of cutting edge education. This has been my purpose for a long time, and I want to make sure that we are constantly pushing the envelope with these educational initiatives. My main purpose of starting EGA was to make education accessible for everybody, right? And somehow I feel like right now I need to focus on that more than ever. So I'm going to be doing that. And in order to do that, I need to take time away from things that I truly love doing, which is one of the things that's going to be this live stream. So I'm sorry, but this will be one of the last weeks that we will have this, and then starting from next week, I'm going to be focusing on other things that I think are going to require more of my time and effort. So if you can, one last time, you know, smash the like button. I feel like a lot of you tune in, but you never smash the like button. You know, that gets me sad, guys. I'm just kidding. Whether you smash it or not, to be honest, it doesn't matter to me. I just say it because it's fun to say it. Smash the like button! It's not like we get 100 likes on videos anyways. But it would be cool if one day we did. I think we had an aim one time. It was like 100 and something? 50 maybe? I don't know. It was something like that. Okay, let's see here. Going back to it. General Motors up 3%, Tesla 1%. Okay, pretty okay. Activision on good earnings, 5%. Under Armour, good earnings. Devon Energy, Okay, lots of companies reported earnings. So GM, Emerson, Exelon, whatever this is. Sempra Energy, some energy companies. Waters, Borg, okay. And then some more will report earnings after the market closes. Okay, let's see here. And other news, Match.com up 5.8%. Okay, Lyft 5%. Okay. Good. Looks interesting. And we'll get to Tencent valuation in a second here. Okay, let's do the SPY technical breakdown real quick. And I promise you that even if this stream goes away, which this is the last week that this stream is going to happen, I promise you I'll still do the SPY technical breakdowns in the weekly webinars, okay? And for those of you that just tuned in, I just want to inform you guys that this will be the last week of EGA's live stream for a while. We will be going away for a little bit and I want to concentrate on other bigger things, which is mainly putting out better content for you guys. So I hope that you guys will be looking forward to that and be watching those videos more than these. And yeah, I hope it truly helps you guys. Okay, so, and for those people who are watching this offline, I'm sorry you couldn't voice your opinion, but I feel like this energy can be used in a much productive manner, and I'm going to do that for a while and see how it goes. If you know, if anything, I'll come back. Okay, I'll make an announcement on IG. You know where to find me. Okay. Okay, SPY technical update. So yesterday we had a little tumble down back to the 4120-ish level. This little demand zone right here. Was it a liquidity grab? Questionable. I actually haven't looked if it was a liquidity grab. Let's actually have a look and see what happened there. Let's go look at the VPR, VPVR. Oh, it might have been. It could have been, actually. Could have been. Yeah, there was a little bit of a liquidity void right here. SPY could have come down to grab some liquidity. It is possible. But I don't think that's the reason why it happened. I think it was a long overdue pullback that needed to happen. So today, what is the game plan, or what are we looking at? So SPY is sitting on a very important pivot point right here. This is a very important zone. A break above and consolidation above this level will see us hit higher. A rejection of this level, which are the 3 moving averages right here, are going to see SPY come back down to the 4130 for a possible double bottom, or a breakthrough, and then the 4090. That's the next level. Okay. There's going to be interim support at 4114-ish. Okay, this right here, you can see there's a dual zone right here on this side. And that'll be your pivot points for today. We really need to hold above 4190 or so. Do I want us to go above 4190? Personally, no. I think we should correct more. I think we need a deeper correction than this in order to continue higher, to me personally. However, I am obviously very biased. I would rather the correction now and then the rally later. But then I know people would prefer the market to just be on crack and just continue higher, and that's possible too, okay? So we'll be playing by the pivot point and seeing what happens today. If we get rejected and we start consolidating below the 4175 today, that's when I will alert my team to again initiate hedges and get out. Start taking a bearish position here. I can see some rejection happening, but we'll see if it truly does break down that way. And then on the Qs, let's see, on the Qs here. Qs are a little bit of a different story. The Qs had a little bit of a deeper correction. Well, considering its movement has been a little more amplified all these times. It's funny how SPY has gotten more volatility than the Qs recently. So with the Qs here, multiple gap fills that were supposed to happen, but then we had a gap down, so now we have a gap up to close. Breakaway gap right here. Breakaway gaps will typically be filled in the future. But then QQQ does have a nasty gap to fill at 302 right here. It has a gap to fill here. It has multiple gaps to fill on the way here. So, you know, the Qs could really slide, if anything. But if the Qs slide, then S&P 500 slides, so you know both of them are going to come down. The Qs are going to have to break above and stay above where it is right now. 331, 332, this level is where the Qs need to hold today. Okay. Above 331, 332 is bullish for the Qs. This is once again another dual zone right here, which we need to hold above today. All right. This will send us back up to all-time high. If we start consolidating below or start selling below this level today, we'll see possible breakdown all the way to the 320s, 321s. That's possible. Another $10 move down. Okay. So very, very important point at which we are right now with the Qs. I closed out my hedges yesterday except for the VIX, and I initiated a short-term position in the ARK fund, a very short-term position I may add, but then I've taken a September expiration because I want time value on it. I bought some close to the money calls, and then on Apple as well. Okay. So I think those options should be nicely up today, paying a little bit of a profit, and we'll see because the delta stacks on those are nice. And yeah, okay, that's all for the technical breakdown. Do you guys have any tickers you want me to break down right before I get into the 10-cent intrinsic valuation? Feel free to throw it out. Feel free to throw out any tickers you want me to break down. Remember, not going to be around next week, guys. This is your last week to bombard me with tickers. ARK fund, well, sitting on a key level of demand, that's one of the main reasons why I took a starter position in this one. Micron, okay. Micron is looking great here, actually. I like this as a reversal play. Swing trade idea is great. This is a dual zone right here. A very solid one, too. Looks like a good spot to grab to the upside, in my opinion, with Micron. I think Micron's good to take here to the upside. Starter position, you want to go for something like a $90 call for like maybe 60 to 80 days out. Amazon, okay. Let's do that real quick. Amazon got slammed, man. Damn. It broke past all my fibs at this point. Okay, this one found a support at, let's see, this level right here. If Amazon can buy up today, then this is a great swing trade. If Amazon consolidates, well, it's already above the demand zone right now. I say open up, close the gap, then continue running as possible. But yeah, let me get rid of this. Could be forming a sideways head and shoulder, but nah, too early for that. Too early for that. We'll see if it actually does. Yeah, your pivot point with Amazon's really going to be mainly above or below this zone right here. Either 3332 consolidation above, or a break below 3280 and a consolidation below that. That's going to be your key pivots for Amazon, in my opinion. And while you're here, if you are in the stream and you want to, you know, show me your appreciation, because next week EGA is, well, from next week onwards, EGA is not going to be holding these live streams anymore. Make sure you smash the like button, guys, for one last time, if you can. Let's see if we can get all 32 of you who are here in the stream to hit the like button. That would be a really, like, if we could get all 32 of you to hit the like button, that would be nice. But I doubt it, though. But you can prove me wrong. All right, what's next? Amazon XOM. Okay, XOM. Let's see. XOM. XOM's up pre-market. Anyone remember when I told you guys to buy XOM sometime when it was trading at $33? Who here is an OG of the EGA live stream that can remember that moment? Who's the OG who remembers me telling you guys, buy XOM, buy XOM, buy XOM. It's gonna rally in the future. It's worth $65. Well, now it's at 59 bucks. You would have doubled up your money, almost, in less than a year or two. That's funny. Okay, XOM is looking really nice. Personally, nice consolidation, higher highs. We had a nice pullback. Consolidation is moving higher now. I think getting long here is a good idea. To play up to the 60-something levels. This is a beautiful trade, to be honest. I think that it has a big gap to fill up here at 69s and 70s. I think it's a highly possible trade idea to take even going forward. I would personally take a leap for this one, though. You know, it's one of those businesses that you just want to buy a leap on. You just get like a $70 call for next year or something and hold that. That's what I see, Justin. Shopify, 1250 calls. Okay, let's see. Ooh, Shopify with a nice bounce. Damn. 1250 for 52. Wait, what? 520 something? I'm guessing you mean 521 or 528. It's got to be either one, right? Okay. I wouldn't go so short in the expiry and then sew out the money. That's my way of thinking about it, Santosh. I think it's a bit out the money and your expiry is a bit too short. If you're taking a swing trade, it has to be much longer, 60 to 80 days, 50 to 80 days actually, and then your strike can't be that far. You got to go midway, like 1230 or like 12, like, yeah, 1230, 1220. That's more like it. Somewhere here. Tesla, okay. Alright, I'll do Tesla. Tesla with the bear pennant break yesterday. It was bearish as heck. Came down to two of my support levels. Failed to break the third one. The second one. The 665 level. Today, let's see if it can make a rally. I don't see it going higher than 690 though. 700 would be nice though, if we can get it. Maybe a possible reversal play here with Tesla. There's a high possibility. It's up 1% already. And when Tesla's up pre-market, it tends to rally the whole day. Like crazy. I hit like, yes I remember, I do, got in at 45. Beautiful, Jacob, that's beautiful. Didn't know you then, but I would have listened. Well, it's okay, Kimberly, there's always, there's always time. Beyond Meat, okay. Beyond Meat. Okay. This one looks like doo-doo right now. I wouldn't play this right now. Look, it could go anyway. I mean, this looks like a nice support zone. Maybe it's gonna try and buy up from here. But the problem is, like, this is sitting awkwardly between like this and this. It's right in the middle. I want to see it make either one of these moves, either up or down, like go either direction. It needs to either get above 132 or it needs to get below. Sorry, either get above 132 for an upside play, or it needs to go and bounce at the bottom here at 115. That's what I would wait for with Beyond, personally. Alrighty. Man, I was ready for the new ticker too. What was your new ticker? Tell me anyway. Maybe I will cover it on Sunday's Instagram story thingy. I'll remember, believe me. Just tell me what it is though. Okay, let's do the 10-cent valuation right now. Let me show you what I had to do to get this valuation. It was pretty long-winded. Spent almost an hour and a half on this one. This was not as easy as the rest of them. So 10 cent has a considerable amount of accounts that I was looking at. But if I wanted to just narrow it down, I think the best thing to look at instead of all of this, which I was looking at. By the way, I had to decide to go with EBITDA in the end. So I used the cash flow valuation instead of revenues. Because this company is generating really strong cash flows, and I thought it'd be more reflective of its performance as a whole. But go to Morningstar. That's just a better way to get all the information at one place. So income statement wise, this company's been growing revenues at a pretty nice pace. Okay, initial years they were growing at, well, before this they were growing pretty slowly, and then slowly has been ramping up at a pace of about 20 to 30% in terms of revenues. Okay. And yeah, it's been a steady 20 to 30% actually every single year, which is pretty decent for a company of this size. COGS has been also pretty decently controlled. Cost of goods sold. And this company has been profitable for, where is it? A total of more than 5 years now, I believe. Balance sheet wise, they didn't put the balance sheet here. I had to. The balance sheet was on macro trends. Okay, so if you look at the cash flow statement, operating cash flow has been growing significantly as well, about 20-30% year over year, trailing 12 months. Also about 214 billion renminbi, which is Chinese yen. So you divide this value by 6 is what you'll get in terms of actual revenues in USD. This company is generating really nice operating cash flow. Okay, and then it's FCF positive as well. So free cash flows are churning, really nice amount here. Liabilities are also pretty substantiated. Equities decent, leading up to Q4 2020, and cash has been increasing as a position. Debt to equity ratio about 0.37, way within the acceptable range, right? We know this should be less than 1. Interest coverage at 25, so they're able to pay back on the debt that they have borrowed. Current and quick ratios also within acceptable range of more than 1. Assets sufficient to service their debt. Positive revenue, operating income, net income, and diluted EPS, as well as net margins of about 33% for this business, which is beautiful. Okay. So from a financial health perspective, great business. All right. We went through this the other day, so I'm not going to go through it again. And I'm not going to bore you with this entire 300-page document, which obviously I did not go through all of it. I just went through the parts that are important to get what I need. So here are my assumptions. With Tencent, the growth assumption for the next 2 years is going to be at 20% because they're, and by the way, I'm taking a very conservative number here. Okay, 20% growth for the next 2 years, followed by, we're talking about EBITDA here, okay? And which is cash flow from operations. And then 1 year of 18%, followed by a 15%, 13%, 8%, 5% for the next 2, and then 3%. Very conservative 10-year projection. I'm front loading 2 years of 20% because I expect China to have a strong rebound, causing the digitization process to resume, which was abruptly halted, but then at the same time also electrified the mainland and domestic business to business, business to consumer. So I think these secular trends will continue to provide really nice tailwinds for Tencent. With CapEx here, we're looking at about a 6% average for 2 years, 5% for 3, and then 3% for the rest of the time. Working capital staying at about 35%, depreciation and amortization at 10% flat. Tax rate very low for a Chinese business, average 15%. Discount rate at 10.5 to 11.5. Yep, I know this sounds high, but remember that this is a slightly higher beta stock, which commands a higher discount rate. Okay, you'll be surprised. This company actually has better discount rate than usual for a Chinese business. Terminal value will be between 14.9 to 16.9x for the exit multiple, giving us a terminal value of between 7.4 to 8.4 billion. And that gives us a per share price of fair value $88.22. So that's your fair valuation for Tencent. And where are we at right now? We are at $78. So this represents a roughly 12% upside here on the stock in terms of intrinsic valuation. And I'll go ahead and write this here. Out of curiosity, which one of you here were on the live stream last year when it was my birthday? Remember when I was stuck in stay home notice and you guys were accompanying me and you guys were kind of cheering me on? That was fun times. Okie dokie. So we have the intrinsic valuation done, everything donezo, and that's it for the stream today. Stock is undervalued, great balance sheet, great business to own, owns pretty much enough assets and infrastructure to lead the continued tech revolution. I think this business is a buy for now. Personally, I will be loading up the boat, but I'm already invested through KWeb, so that's my whole opinion. Anyhow, I appreciate you guys tuning in to the Everyday Growth Advisors live stream. Have a great trading day. I love you guys. Thank you for tuning in, and I'll see you guys on Friday, which will be the last live stream for a while. So peace out, guys, and I hope to see you guys very soon. Take care. Bye bye.